Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar resumes its upside momentum at the start of the week, lifting towards the 71-cent area and just printing a fresh yearly high as the broad US dollar weakens towards 96.74 as risk sentiment and also supports the ongoing leg high for the Aussie, reinforced by the RBA's recent 25 base point hike to 3.85%, and it's clear discomfort with demand-driven inflation. The US dollar also weakened on reports of reduced Chinese US Treasury exposure, weakening the move to the recent lows, as I mentioned, of 96.74 after reports that Chinese authorities urged financial institutes to trim US Treasury exposure amid heightened bond market volatility. So looking at the technicals, as we reach the top side of the range, as I mentioned, around 71, figure 30, the market is in a slight pullback mode. There is a bit of divergence here that could also indicate a possible bull trap at the top side of this range and see a pullback to 70.45 or even towards 69.85. Any upside attempts, as I mentioned, should find a cap around 71, figure 30. Turning to the euro, also surges and back in focus now towards 119 to 120 as the market finds more momentum on the back of the weaker US due to the Treasury reports that has dented sentiment to the US. Also this week, we've got the key data, which is the late January's US job report that was pushed to the 11th of February due to a government shutdown. It is expected to see modest payroll growth, around 70,000 jobs added, with employment near 4.4%. So looking at the technicals, as we can see, as I mentioned, they are firm. Any pullback likely to be limited around 118.35 to 60 area. And the risk is, as I mentioned, to the top side, maybe stretching to 120. Well, the bull trap may be in place for dollar yen as we've got an engulfing candle to the bearish case. And if so, with technicals very heavy, could see the move now, not to 155, but lower. That is to 153 zone. And there's still a base at 151. I still feel the risk is to the downside. And if this engulfing candle is confirmed, that is from a break here, which is seen at 155.65, then we should get that confirmation to the bear case and further weakness to come into play. Sterling also recovering and looking like a possible rally to 137.15.65 area. I like this pattern. I still feel that sterling is a little bit underperforming against some of the markets and therefore could see a further extension that maybe hit around 138. Wrapping up with commodities, well, we've got an extension from Friday's rally and now looking towards 5,100 as a potential target, or even on to 5,200. This year, well, the call was at 5,000. Now it's at 6,000 with any weakness. Likely to still be whipsawed and stretching, so do be wary if you're trading this market as the ranges are broadening very widely. And oil, well, the market staged a good recovery around that 62 mark and now looks on to 65 to 66 as a potential target and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed the great start to the day.